10 income tax rules that will change from April 1st.
1. 40,000 rupees standard deduction introduced. This additional deduction has been proposed in place of existing deductions of 19,200 rupees for transport allowance and 15,000 rupees for medical reimbursement. This will benefit 2.5 crore salaried employees. Pensioners who normally do not enjoy any allowance for transport and medical expenses will also benefit from it. After the introduction of standard deduction, the salaried class will enjoy a flat deduction of 40,000 rupees from their taxable income. Standard deduction was earlier available for salaried individuals previously, till it was abolished with effect from assessment year 2006-07. The benefits arising from standard deduction depends on the tax bracket a salaried individual falls in. 2. Higher cess. The Finance Minister also raised cess on income tax to 4% from 3% for individual taxpayers on the amount of income tax payable. 3. Introduction of long-term capital gains tax on equity investments. A new 10% tax, that is cess extra, will be applicable on capital gains exceeding 100,000 rupees upon sale of equity share or units of equity-oriented funds. However, for the benefit of taxpayers, the gains till January 31, 2018, are being grandfathered. This means that only gains over January 31, 2018, prices will be taxed. 4. Tax on dividend income from equity mutual funds. A tax at the rate of 10% will be levied on dividend distributed by equity-oriented mutual funds. 5. More income tax benefits on single premium health insurance policies. Health insurers typically provide some discount if you pay premium for a few years upfront. But earlier, an individual could claim deduction only up to 25,000 rupees. Under the proposed changes in Budget 2018, in case of single premium health insurance policies having cover of more than 1 year, deduction will be allowed on a proportionate basis for the number of years for which health insurance cover is provided, subject to the specified limit. 6. Income tax benefit on NPS withdrawal. The government has proposed an extension to the benefit of tax-free withdrawal from NPS, National Pension System, to non-employee subscribers. Currently, an employee contributing to the NPS is allowed an exemption in respect of 40% of the total amount payable to him or her on closure of account or on opting out. This exemption is currently not available to non-employee subscribers. The extension of tax-free withdrawal to non-employee subscribers will be available from financial year 2018-19. 7. Deduction in respect of interest income to senior citizens. Senior citizens will get higher interest income exemption limit on deposits in banks and post offices, including recurring deposits. Currently, a deduction up to 10,000 rupees is allowed under Section 80T of the Income Tax Act to an individual in respect of interest income from a savings account. Under the tax laws, a new Section 80TTB is proposed to be inserted to allow a deduction up to 50,000 rupees in respect of interest income from deposits held by senior citizens. However, no deduction under Section 80TT shall be allowed for senior citizens. 8. Higher TDS, tax deducted limit for senior citizens. The threshold for deduction of tax at source on interest income for senior citizens is proposed to be hiked from 10,000 rupees to 50,000 rupees. 9. Higher deduction limit under Section 80D of the Income Tax Act for senior citizens. In Budget 2018, the government proposes to increase the deduction for senior citizens on payment of health insurance premiums. The limit is set to go up from 30,000 rupees to 50,000 rupees. For individuals below 60 years of age, the deduction under Section 80D continues to be 25,000 rupees. But if their parents are senior citizens, above 60 years, they can claim an additional deduction of up to 50,000 rupees, taking the total deduction to 75,000 rupees, higher than the current limit of 55,000 rupees. 10. Higher income tax deduction for senior citizens for medical treatment of specified diseases. The deduction available payment towards medical treatment of specified disease is proposed to be hiked to 1 lakh rupees for both very senior citizen and senior citizen. Earlier it was 80,000 rupees and 60,000 rupees respectively.